One of the things that pops to mind, it was actually during the summer of 2014, and we had just come off this incredible growth period. So we ended 2020 with essentially 4 billion of premium, and we've grown to 7.5 billion at the end of 2024. And one of if you talk to any actuary out there, they'll tell you the quickest way for an insurance company to fail is to grow too fast. And so we were at this precipice in 2024 of, can we continue to grow, or should we do things to slow down that growth? And the insurance market itself is somewhat a commodity. You have to have insurance, and competition is high. I know you probably turn on your TV, you watch sporting events, and 90% of the commercials that you see are insurance commercials. And so, were we going to be able to take advantage of this moment in time where we were growing our policies so much, or were we going to have to slow that down because we weren't sure that we had the capital available to support the business? Going back to the question of public versus private, we're a private company, and our options for growing our capital or doing debt financing or things like that are much more limited than a public company or even just a traditional company that's owned by shareholders. And so it was that point in time where we kind of had this epiphany that we had to do something to grow our capital base to support our top line growth. And so we actually went out into the market and we got this very specific debt instrument that's specific to insurance companies called a surplus note. And so we were able to raise $500 million. And what that's been able to do for us is, first of all, we came at it from a period of strength. We had good financial results, and we weren't waiting until something went south when we may not have been able to get investors at the table to underwrite this note. But we also didn't have to slow down our growth plans as much as we might have if we didn't do it. And so we are able to continue on our growth trajectory now. We're planning to, eclipse that $7.6 billion that we had at the end of 2024 because we executed that note in Q1 of 2025. So that to me was a pretty proud moment for the partnership between the finance team and capital management team and the business, because we were able to successfully go out and market a pretty large surplus note in comparison to some of the others that you see in the industry.